As a professional investor, one of the most common questions I get is how I personally use ETFs in my own portfolio. The answer is surprisingly straightforward. I always start by selecting broad market ETFs, such as an S&P 500 ETF. These funds give me exposure to the largest US companies all at once, providing instant diversification. Instead of spending hours researching and picking individual stocks, I can cover a wide range of industries and companies with just a single investment. This approach not only saves time but also reduces risk, as my portfolio isn't tied to the fate of any one company. It's a simple yet powerful way to lay the groundwork for long-term growth. Once the foundation is set, I like to add a bit of personal conviction by including sector-specific ETFs. For example, if I believe technology, healthcare, or clean energy will outperform in the coming years, I'll allocate a portion of my portfolio to ETFs focused on those sectors. This allows me to tilt my investments toward areas I think have strong growth potential, without taking on the risk of betting everything on a single stock. By combining broad market coverage with targeted sector exposure, I create a balanced yet dynamic portfolio that reflects both my long-term outlook and my specific interests. Key part of my ETF strategy is simplicity and discipline. I rebalance my portfolio just a few times a year rather than reacting to every market move. This helps me avoid emotional trading, which is a common pitfall for many investors. I also pay close attention to fees. ETFs typically have lower costs than mutual funds, meaning more of my money stays invested and working for me. Ultimately, my goal is to spread risk, stay consistent, and focus on long-term growth. Even as a professional, I rely on ETFs to keep my investing approach straightforward and effective, proving that smart investing doesn't have to be complicated.